Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Monday, the 26th of April, 2021, and we're after 7 at night. So I'm looking at the markets, nice little rallies that we're getting in some of these, but where are we in these markets? You have a lot of information coming at you this week. We go into the two-day FOMC meeting starting tomorrow with the policy statement on Wednesday afternoon at 1, then the press conference. We have the president speaking, I think it's Wednesday night, where he's going to be talking to Congress with his budget and his proposals as to where he thinks he can take America. We already know it's not going to fly for the size that he wants, but that's immaterial. Compromise is what this might be about. I didn't say will be about, might be about. The next thing we have is GDP numbers coming out. So there's a slew of info, and we have to watch them. We have to watch them hard. The market is going to be looking for the Fed. When's interest rates going to start going up? Well, the Fed told us when they start tapering back their bond buying program, that'll be the warning sign to the market that the interest rate hikes will follow it shortly thereafter. Not necessarily the next month, but shortly thereafter. They've taken their time. Why? The inflation bug. But, you know, the inflation we see, do you look at the price of lumber? Imagine buying a house with that. Looking at price of copper. Copper's $4.50 a pound. Imagine a construction site. If you don't watch that copper, it's gone just like that. I remember the last times they were stealing and taking down stoplights. Yeah, stoplights. They wanted the wires for all that. Cities better be on the alert that this is a serious issue that's coming again. But the real inflation isn't the material. That's our everyday part when we're buying a piece of equipment or something. It's service. It's the labor of service. That's what you got to watch. Okay. So on PAVE, this is a new high for the move. Am I surprised? No. What's the president's speech going to be all about as we go into Wednesday night and he asks for money? I think it's called infrastructure. Now, the definition of infrastructure by the president is sort of strange. If it's true infrastructure, I think he would be able to get a deal done, but he's trying to attach too many things to it, in my opinion. But what do I know? Higher lows, higher highs, uptrend. The market's over the 18-day average and it keeps fighting its battle right against it. What about the high? Well, that high is the Bollinger Band. You're over it, but you only stay over it 5% of the time unless the market starts a breakout. It did not do that. On Friday, the market did close in the top quadrant of the day over the band. I needed to see that today, and I didn't get what I was looking for in that. In fact, it closed near the low part of the day. Doesn't mean it can't break out from here, but it didn't give me what I call my classic work, and you're overbought. I think there's money coming off the table in front of the president's speech, but there was money, I think, to be had coming in by the pros against these numbers and looking for that upper Bollinger Band. In GameStop, I don't know why that popped up there. The battle's going to be the 18-day average. You can see that just with what's going on. We'll see what goes on from there. I'm just watching it because it never did give back that big of a money. It's still way ahead of where Reddit began that whole thing. In the XSD, the semiconductors, all we hear about are the shortages, yet the market was in a correction mode, found its way for support right here. And suddenly it's overbought, but it's out of a trend. The market has not been trending. In fact, even right here, you had a higher high, higher low, and then you immediately lost that. This is just the market doing this, back and forth in there, not handing you much on a daily chart. Weekly chart might look different. SMH, this replicates the semiconductor 25 index. Well, the battleground's ultra clear to me. It's this 18-day average. Take out this 253.92 that negates this down wave. Momentum up, not overbought for the slow stochastics. The part of the market that's got bias is up because you're over that 18-week average, 8-day average, but you still have lower highs, lower lows, and that won't change on this. You can break that of two lower highs, but you're not going to get a stepping ladder upwards. You're getting the same thing in PODX. You got up high enough to end the downtrend in the market, but it really began back here. where the market tried one rally, then slammed everybody that thought that was it, and now it's grabbed hold again. And it's going to be, it looks like it's running right into resistance here. All right? But it's got the bias down since you're under the 18-day average. There's no trend in the swing line. You have a lower and low, higher high. You lost the bearish embedded reading. And when you lose it, market often makes a run to the 18-day average of closes. It's exactly what I'm expecting, and then time to look anew. We'll see what happens. Here, if we come to the ESGU, take a look at what happened last week. This is Wednesday. So on Wednesday, you still had embedded readings. You lose it on Thursday. You gain it back on Friday. Yes, right through here. Now, if it loses again, that's a problem for the market, but it didn't. It's keeping the readings, as you can see. It's still back in its bull trend. That was a head fake. And just what happens sometimes. But if you play that you're going to get head fakes, you're going to get burned. If they come and you're coming out of long positions, so what's wrong with that? You know, I don't know that you had a profit or loss, but that's what you're supposed to do. XLE, the energy. Last week I told you, you're coming down to the Bollinger Bands, and I think the pros are coming out of this market. I'll stick with what I said. Lower highs, lower lows. You had gotten yourself where you were not oversold. I think they were selling it here, but covering right there. And I still do. And now you've got the swing line up. The 18-day average is the arguing point, but any close over 48.39 turns the trend up as long as you don't get back under 46.87. SPY, bullish. Now, on last week, let's talk about this. Here's the market on Wednesday. This is Thursday's action. It got ugly. You lost the embedded reading. The reading was 74. The odds of it getting back over 80 are slim. The market did it. Doesn't change that the odds are slim. It did it. So the bull trend is back on. That puts into play coming back up here to the upper Bollinger Band, and you can see the market is trying to do that. Now, if it loses that reading again, it could be very ugly. It's got to take advantage of it after it lost it for one day. The emerging markets have not come back from their oversold condition. Let me say it. They had an embedded reading. They lose it. Now the market's oversold, overbought. I'm all screwed up with words. Overbought, you got to work that off or re-embed, and that's just what the market's trying to do. It's not there. Both numbers here have to be under 70, or they both have to start going over 80 for several days. In the gold market, okay, so we had this run up to the upper Bollinger Band. Gee. Surprise, surprise. And that combination with the 100-day, I can tell you, I was telling my traders, I think the pros are coming out up there. They don't need the exact number. And that's just what I think they did. You're losing tonight the embedded reading. You can gain it back tomorrow, but if it stays lost, the odds favor. You're going back to the 18-day average to rethink. In the gold miners, the same thing. You were looking okay. You started losing the momentum on Friday, and today it stayed lost. Could it regain it tomorrow? Only the day after both numbers, one of them comes out of being over 80. So only one day. They get that tomorrow. And if it does, then the resistance becomes, to me, the 200-day average in the upper Bollinger Band. Who's in control right now? Well, the bulls were. I think they gave that up on the close. They need a strong close tomorrow. TLT, do you really want to go into the Fed talk? That's up to you. You're overbought, been in an uptrend, had one shot out up here against the Bollinger Band in an overbought condition. It was never embedded there. I don't see anything on that chart. FXE, another one of those errors. Higher low, higher high. I'd look for failure right in this area. You're at the 100-day average, close to the upper Bollinger Band. The trend has done its thing. It offered traders with the embedded reading the ability, if they wanted to come in, to get in. But that's an area to begin taking money off the table. Make the market prove it can get to the Bollinger Band. I don't think the traders are coming out of everything on this because of the embedded reading, but I think they're peeling back some positions in front of GDP, which is expected to be strong, and in front of the Fed. But if you don't lose, this is what they're going to look at. If you don't lose that, I think the market's going to stay pretty strong. You know, a lot of you trade futures and ETFs. Well, we put together a combo package. Now, this ad's a bit older, and it's all about trading ideas, because what I do in this one, I say the afternoon Spider ETF. It's no longer that way. I record that now at 8:40 in the morning, every morning. It's in your hands shortly around 9:20 or so. But the idea there is I wake you up first with the futures, because I record that at 5:40 in the morning, a.m. And that is daylight savings time now. And you're going to get the touch of the fundamentals. You're going to get what the markets are doing abroad, a lot of news as to what's going on with that, the reports of the day, what the market's been looking for. And then when I do the Spider ETF, I've updated the reports for you. I say 34 graphs. There's over 40 now because I keep adding. We just got to do this, and I've been so busy in other things that not much I can do. But the combo. And it's an introductory price, $16.90. So you're getting each week, now the word is each week, you're going to get 2 videos a day, Monday through Saturday. The Saturday videos are weeklies. So we're not going to look at dailies. We're going to go to the weekly for the longer term positions because they're so important. And I do mix those in and out during the week on both the futures and on the Spider ETFs. But for $16.90, all those videos, maybe you get an idea, maybe you don't like it. Most of the people that try it, I'm not hearing we don't like it. You have a great day. Just go to the website, go under the word research. Everything you need is there. I'm Ira. Take care.